All right, welcome back. Swinging back to really one of our top stories this morning, the uncertainty continues on Wall Street as investors are reacting to the latest round of tariffs announced by President Trump. There's a live look at the Dow Jones right now, down, slipping a little bit more in the last couple of minutes, still down 822 points, more than 2%. This is the third straight significant drop for the market, sending the Nasdaq into bear market territory, meaning down more than 20% from its recent high. The S&P 500 had its worst day on Friday since the pandemic in 2020. So amidst all of that, not very great news. Joining us now for more insight is Jason Matthews from Matthews Financial and Insurance Solutions. Thank you so much. Always great to talk with you about all of this.
Definitely. Thank you for having me.
I think the big thing is to talk about the market swings first. What are you advising clients right now so that to help them from panicking? And I'm sure it depends on whether or not they're retired, close to retirement, or a young investor, right?
Right. Definitely. So there's three phases we'll look at. So let's say you're a young person. You're investing, you got time, your time horizon is secure. If you're pre-retired, we're really reconsidering things. We're looking at how we can rebalance your portfolio. And then for as retirees, we want to make sure that income is still coming in, that the market's not really fluctuating, being more stable at that point in time. So those are the three categories we're really looking at when it comes to money investments during this period of time.
And the younger people who have time, or if you're not really close to retirement, stick it out, right? You don't want to pull your money out right now when the markets are down 52-week lows.
Right, you don't want to do that. So you don't want to sell, right, during this period of time. But there's some opportunities where you might sell. So here in the Bay Area, you have a lot of people who are invested in their company stock and might have concentration risk, which means that more than your portfolio, more than 5 to 10% of your portfolio is in your one company stock. So this might be a great time for you to do some tax loss harvesting to diversify out of that portfolio as well. Another thing they might want to consider is, hey, maybe we do a Roth IRA conversion. Since now our IRA's value dropped, we could do a conversion, which makes a less taxable event for us than we normally do.
Buying opportunities right now?
Might be some buying opportunities. I think it really just depends. This is where you have to really investigate, do your research on certain companies, right? Which ones won't be affected by tariffs as much, or they get support. So on Friday, the big one was Lululemon, right? Vietnam said they're getting rid of the 0% tariffs and their stock went up drastically. So I think it's going to be case-by-case basis. It's just not just throw money at anything right now.
All right, let's talk about the purchasing and the specific items and everything, because inflation, we're talking about maybe purchasing big ticket items now before those kick in, maybe stocking up on some things. How are the tariffs going to impact us, do you think, in the short term and the long run, and maybe how we should be positioning ourselves?
I think for the short term, stock up on things that you might actually need, but this is a time where you really want to be conservative. Do you really need that new iPhone? Probably not, right? So this is the time where we should be really being conservative with our money, buy things that we actually need, knowing that in the future prices are going to go up. If there's something that you have to have, go ahead and do it, but try to be very conservative this period of time. As we're going to see a lot of volatility, you are hearing that some companies might have to have layoffs because at the end of the day, tariffs is really a tax on companies, and might have to pass that profit down to their employees by laying them off going forward.
Well, that's a big concern too. So when you talk about companies or layoffs, not just big companies, but consumer spending is really starting to pull back, right, as we're seeing inflation. So, I mean, I'm worried about local restaurants, right, local small businesses. People are going to cut back on what might be considered discretionary spending.
Right, absolutely, and that's going to be an issue is, all right, so we have these tariffs. People feel like, oh, the price of everything is going to go up. People are like, whoa. What I'm going to do, people want to pull back, and you're going to might see a slowdown of the economy, which could cause possibly a recession in a couple more quarters, right? So that's the issue we're going to have to definitely look at and consider during this period of time. If you're a small business, you might not want to go ahead and reinvest in your company and be aggressive towards things. You might want to pull back and be a lot more conservative right now.
All right, let's talk about recession really quick, because this morning, another big bank, Goldman Sachs. Last week we had JP Morgan. This morning, Goldman Sachs raising the risk of a recession to 45%. So when you talk about kind of the Fed and balancing interest rates and helping prevent a recession, what are you seeing and how are you advising to adjust to the possibility of not just a U.S. recession, but a global recession?
Yeah, global recession, if it does. You see that with the Asian market this morning, how theirs went negative all throughout all the Asian markets. The one thing, like we keep saying, just be really conservative with your money and assets right now. Make sure you diversify your portfolio. But, don't buy that extra car right now. Don't buy those luxury goods. I know oftentimes during this time of year, people have these huge tax returns where they might go and splurge on vacation and trips. You know what? Pull back. Put that money just in case something does happen with recession and layoffs and the R word that we hate to hear about.
Well, in the car in particular, I know we have to let you go, but people are thinking, oh, should I buy that car now before the tariffs kick in? But you're saying maybe hold off on those big purchases.
Right.
Keep your money tight.
Keep your money tight. Also, as we see interest rates decline, start considering where you put your money that's in your savings more for the long term, because interest rates have been declining. So you might want to look at your 3-month treasuries, your CDs, your money markets, and look at longer term yields right now and locking those rates in as interest rates are starting to drop because of all these tariffs and people worry about the R word.
Good point. Okay, especially if you're saving for college, maybe put those in. Jason Matthews, Matthews Financial and Insurance Solutions. Thank you so much. Always great to have you.
Definitely. Thank you for having me.
Talking about this. All right. Coming up here on Mornings on 2 to 9.